Hello, active traders. It's great to see so many of you here tonight for our annual Breakout Mastery Preview event. I usually only do these once a year, so congratulations and welcome aboard. I'm CEO and President of TradeMastery.com and Day Trading University. As always, all information is for educational use only. I'm not giving advice about what to buy, sell, or hold, and by watching this, you agree not to make actual trades. We make no profitability or performance claims. It's all for education use only. If you do have questions tonight, feel free to throw out your best question. I'll stick around and answer. You may have seen me at that should say 2017. I've been doing the Vegas Expos for many years, mainly on breakouts, like momentum gaps and breakouts. So I'm a long-time Traders Expo and Money Show speaker. Always great to see big turnouts. People cheer out loud like they did last November at Bally's. Anyway, so I always highly recommend you folks go attend the Traders Expos if you get a chance. And subscribe to Stocks and Commodities. I'm in every single month's issue in my Trading on Momentum column, and highly recommend that as well. If you come and see me in Vegas, it's fun to have a lot of people out there, even back in the now defunct, sadly defunct Active Trader magazine. I'm one of the original experts. Who can Breakout Mastery help? It's for both intraday and swing traders. For stocks and ETFs, you get both core and advanced tactics. Most of what you get in my Breakout Mastery training is for intermediate to advanced traders, and you can use it for a variety of different techniques and patterns. We like to look at how to master these by avoiding false breakouts. And since I have an aversion to having too many PowerPoints, let's look at the charts already. One of the things that I like to cover in Breakout Mastery is the very strongest longer-term swing charts. So if you're a swing trader or a position trader, this isn't so much for intraday trading. That's what my live trading room's for. But Breakout Mastery is for swing traders, especially those of you who like to buy and hold for, say, a month or two at a time, because you can see how strong these work. These are all charts that I alerted my members to back on December 27th. This 100% of these tickers are from the December 27th members only webinar. For proof, you can download the recording of the members thing and go down to where it says try before you buy. You scroll down a little bit on that page here. And this is the December 2017 members only video. And it's a full hour long. So I always encourage you to take a look at whoever you're considering working with in a coaching relationship. It's always, or learning, a student-teacher relationship, whatever. You should take a look at their content and see just how professional and high quality it is and successful in making great breakout calls before you invest, right? Whenever I ask my Money Show audiences or traders in my webinars, I say, how many of you agree? Wouldn't it be a great idea to actually see what you're getting before you buy? And I think that's a good idea. Let's take a look at what some of these charts have in common. One of the things that you'll often find is strategies that are not commonly known. For example, I tell traders not to buy anything with a 9 in it or getting close to 9 because it usually rolls over. And I published an article on stocks, 2 more articles, I think, on at least one in Stocks and Commodities on that. 9s are exit targets. So newbie traders who didn't pay attention to my teaching would have bought near 59 and promptly got stopped out. So what you want to do to avoid false breakouts is know these kind of signals that I cover in our Breakout Mastery training, right? At this time, it looked like a good breakout, but when you're taught the strategies like avoiding price action triggers with 9s in them, that tells you to stay clear. It's still a good chart, up a new high somewhere over 60, but for now we'll let it take a rest. One thing you want to take a look at when you're trying to find out which breakout charts make the most sense, I found, at least I've had the best success in my own real money trades, is doing gap continuation. So you have a minor gap that continues, it sets it up for another little minor gap that continues and so forth. We've got a bearish engulfment here with these 2 candles. That's a bearish engulfing pair. We want to see if it's able to take out new highs somewhere north of current resistance. Now here's the pattern that you'll often find, and I find this a lot myself. When you have a bullish cup pattern, one of the things that I think will really help you as a trader is to confirm what the heck is going on at the right side of the cup. What I found makes for my biggest winning trades is when I have a large green candle right near the right side of a cup. And if you have that either before or it's intersecting the right side of the cup, the previous resistance forms a cup pattern, or you have a large candle above it, or so forth. These are what I call signal candles. We've got large green directional volatile candles that are getting new price action with high volume to confirm it, right? Do you see the volume here on these 2 days is higher than all the volume back here the last few weeks? Well, that's a good buying signal. That's the kind of thing that I cover in Breakout Mastery for my traders. So we can look at not only the patterns that work the best, but how to develop a kind of a scale in or a secondary set of triggers as well. So let's say you missed the first entry. What do you do about that? We've got an overhead resistance. I guess technically we could pull that right down to here. Overhead resistance at 20 and a quarter or so, and support right near 19, say 1890. So this is a congestion box. What we like about this chart is, at least what I like, is we had a big move up here, a multi-point run going from 15 to 20, 5 points on a $20 stock. I want to see if we get another 5-point run out of this guy somewhere north of 20 and a half or so, if it's able to continue up. If it just chops and drops, we stay clear. But this gives us permission, and well, what that does for you as a trader is give you permission to consider it for a next breakout, because volatility leads to additional volatility usually. Even if there's a resting period here, you'll often find that it picks up heat and continues on up. Another thing where a lot of traders make a common mistake is to trade instruments with point ranges that are too small. This one has a spectacular point range. For a $20 stock, it was a $13 stock with a consistent uptrend that ran up to $20. What's horrible are like those under $10 stocks that are pop and drop one-hit wonders, right? It's a $3 stock. Now it's a $5 stock. Next thing you know, it's a $2.50 stock. You lose thousands of dollars. Stop the madness. There's got to be a better way. Those are stupid charts that morons day traders swing trade. Professional traders, we like a little more consistency around here, right? We like people. We want people that are honest and clean and do what they're supposed to do. And I like charts the same way. So I like well-mannered charts that are. Isn't it a well-mannered young chart? It's doing a great job. It's starting to run up. It's pulling back just a little bit, so we're staying clear. If it attracts new buyers, especially if volume confirmation comes in. This guy trades 25, 30 million a day on a hot day, right? This is FCX, Freeport McMoran. Good chart. What do you notice about this? Well, I don't like the bearish upper shadow, kind of a shooting star type pattern up here. And I also don't like the fact that it's getting close to the 39. There's two different ways you could trade this kind of chart. Personally, I'm very conservative because I don't like losing money. That's just me. So I would wait until 40.5 before entering. That's a conservative trader's approach. What I'm illustrating for you is the fact that I often give multiple entries to help tailor the breakout mastery training to the type of trader you are. So conservative traders like me, I'd wait till 40.5 because I never buy anything with a 9 in it because that's usually going to stall near the 40. So I'll be conservative. I'd put a buy stop 40.5 limit 41 order. Always use stop orders and limit. Always trade with limit, buy stop limit orders for swing trades. Anyway, 38.50 is a resistance here. An aggressive trader might want to go in at 38.8, but you have to be aware that there's higher risk with that because it's within a false breakout region, which is usually 50 cents or so above the obvious high. If you did buy 38.80 or so, which would be the earliest I'd get in, let me ask you all. This is the part where you guys wake up and give me some answers, give me some feedback. Ka-ching, where would you trail a stop if you bought 38.8? The good traders will have tight stops. The sucky traders will have really big stops. I don't know, there's a moving average down here at 34, so let's use 34. Derp. Epic fail. That's not how to trade. Stop it. You guys got to use tight stops. Like my colleague Tom Sosnoff from Tasty Trade says, trade small, trade often. I say trade wide, not deep. Same thing. Don't take big stops. Play a field. If any good professional trader, we're going to tell you this kind of thing. Use tight stops. Where did you guys stop out? I'm starting to see. I'm seeing 36. I'm seeing 37, 37.5, 36. Ask 400 traders. You get 400. Well, not 400 different answers, but 370 different answers, whatever. I'd use 37.50 or so, 37 at the drop dead. A loss of 2 days, of 2 sequential days, is a reason to get out of a trade. So if you're along here right now, for example, 37 would be the maximum stop. That's just under support on a 2-day basis. If we get in at, say, 38.8, 37.50 or so, or 37.80 or whatnot would be the trailing stop. So somewhere reasonably tight. You have to combine the three elements to successful professional breakout swing trading for both directional volatility for both longer term and shorter term charts are as follows. The three keys are tight stops, number one. That's always rule number one, meaning a loss of 2 days support. Tight, clean charts is the second most important thing to look at. Nice, clean, focused charts that are easy. You could, pretty much throw darts at some of these charts and come out smelling like a rose, right? These are rock star charts, like this one, HD, right? Like a piece of string that's been tied tight. Okay, so tight charts. And the third thing is to play the field. So here, you see how a loss of 2 day support in ITB would be, say, 45.50? If I teach you nothing else, it's how to play the field with tight stops and strong charts. That's the trifecta. Clean, tight, wide-ranging charts with multiple points of range that make the profit and loss numbers work out. Combine that with really tight stops and still hedge your bets. Play a field. Don't go for a magic chart pattern that came up on some magic guru scanner and go in 1,000 shares on 2 different stocks and think that's going to work. That's not going to work. I've tried that. It doesn't work. What works is you position size, you scale. Yes, it's a little more work, but maybe you trade 4 or 5 of these, or 6 or 7. Paper trade, half a dozen of these. If you're an experienced trader, many of us are in up to several dozen positions at once. But, if you're limited on capital or time, at least do a minimum of half a dozen trades at a time. You should always be in 6 swing trades or more at a given point in time. If you're swing trading just 1 or 2 charts, you are going to lose. All right? That's the truth of it. You want charts that actually work, and you got to play the field. So let's say you're long in KTR here. Where would you trail a stop? If I accomplish nothing else for the world's traders here tonight, it's teach you guys how to use tight freaking stops like a professional trader. It would be around 74, right? That's the nearest whole number, and it's right at a 2-day low. So that's where professional, that's where I'd trail my stop. I'd put a sell stop. I use the sell stop limit orders because I don't want to sell it if it gaps way down here or something. I'll give it a day or two and see if it comes back to life. But it's an advanced technique. But I usually say a sell stop 74, limit 73. So if it does a little gap or it sells off down here, if I'm in long, let's say I started the trade off at, say, 51, 52, scaled in at 62, now we're up to near 80. I want to bank a profit if it comes back down to 74. The biggest sin, the biggest grievous error as a trader is, taking big stops because you're only trading a few charts and using big stops, or you trade without stops. But the second biggest error as a trader that you'll run into is not using a sensible, rules-based approach and having discipline to get out of trades at the first sign of trouble. The main thing, like I was telling my live room members this morning, making your first $1 million, that is a pain in the ass. And it's a lot of work, I ain't gonna lie. But the trick is not making your first million, which I've done a few times. It is keeping your freaking million. It's like these lottery players that go out there and they win a lot of money and they piss it all away in a few years. Anybody can do that. That's not the trick. The trick is keep your money in your winning trade. So if I'm up in a trade, say $800, and I was mentioning this at my Money Show appearance for the expo last November, live in Las Vegas. I was saying if I was up, say, $800, if the trade gets down to an unrealized P&L of 600, I'm going to go to cash because I want to bank a profit. And those kind of approaches are what I teach you guys in Breakout Mastery. More charts are coming, but first, a quick commercial message from our sponsor. Oh, that would be me. Anyway, I've been running Breakout Mastery for many years, every single month. The last Wednesday of the month for 5-6 years now. I've been running the Breakout Mastery course, and it's only $497 for an entire year of monthly webinars. And they're kind of like mastermind sessions with these advanced charts where you can ask questions, you can bring your own charts. I know I had a trader from Israel who couldn't make it because of his work schedule or the time difference or whatnot. So he would send in a chart and a question before the event. I would record the answer during the event for his benefit and for the benefit of all of our members, and then record it so he can download that in the members area, which looks like this, right? Members area gives you downloadable videos every single month, so in case you can't make the live event, they're high-resolution Blu-ray quality downloads that you get to keep forever. You don't have to stream some fuzzy blinking chart like some of these outfits do. I like to give you guys a nice 1920 by 1080 Blu-ray quality high-res download that you can keep forever. And I keep the most recent 2 months of webinars there. anyway, I do have this thing on sale for the next few days until Tuesday at midnight, because our first event is Wednesday. So I want to have time to get everybody their logins and their passwords and get them registered for the GoToWebinar event. So I've got 3 bonuses that I'm adding. I haven't offered these in a couple of years. Fast action bonus. You'll also get the October and November, and I'm giving away free the December one. So that's the kind of a free bonus the world gets. But you guys will also get October and November's events as well as December to get you off to the right start. So you can look at 3 hours of content. Each of the webinars for Breakout Mastery is a full 60 minutes plus Q&A time at the end. Also give you a $100 gift certificate, kind of like a rebate, good towards any of my upcoming premium webinars in 2018. And also a breakout critique certificate kind of thing. Not a paper certificate, just breakout critique, where you can screen cap a chart of a trade that you made that didn't work out, maybe that you got stopped out on. And I'll give you some, at least my insight in terms of how I would have done it differently, some technical signals you may not be aware of that I can reveal to you, and the rest of it for a real trade that you did. So that's a breakout critique that I can do for you. And also, of course, you can bring those to any of the members' webinars. You can take a look at the December event right here. We're going to get back to the charts in just a minute, I promise. But to, try before you buy. How many of you, by the way, agree that it would be a good idea before you buy any coaching or downloadable course or anything from any educator that they actually have to show you a sample of what you're getting? I'm proud of my stuff because I work my ass, pardon my French, I work my tail off for you guys. So I proudly show you video clips and lots of content so that you can get a feel for the professionalism, the authenticity, the integrity, the success, and the rest of it of what I teach. Anyway, in that video, you'll see every single one of these listed. I have more. I usually go over about twice as many of these charts in an hour, but this is a group of the ones that we covered 3 weeks ago for our members, and they all ran up, so that's cool. The service also doubles as a scanning service, especially for longer-term swing traders, because I'm going over the best charts by definition. So, I give you entry, trigger, price points. The main thing is we deconstruct the patterns. For example, next week, our members, including you, hopefully, will learn volume momentum breakout trading. And I'm not going to read all this stuff. There's a very detailed, I put a lot of work into my courses. I used to be a corporate trainer for the Ford Motor Company, Rockwell International, Sheraton, Chevron, and other big organizations, Fortune 500s, that hired me to come in and work with their employees. So I used to run a training and development consulting business with just north of, I think it was 104 clients total. So I was really busy for 10 years of my life before I started my trading sites. Got tired of traveling and got even more tired of company politics. How many of you have ever had a boss who's a total control freak? Or coworkers who are morons? Or customers from hell? I hate when that happens. That's why I got into trading. As much as I like and value a lot of my clients, you have to deal with the whole company, and often there's a lot of unsavory characters there. So I decided, let me get into trading, figure out how to do this the right way, and I've been there the last 20 years and never looked back. So anyway, I used to charge $12.90. What was it? $12.95 with $6.97 was the discount. That was for years. Now I've dropped it because I got so many new members and subscribers, and I'm blowing up on social media. I got so many new customers. I can drop the pricing and make it up on quantity because I got so many new folks. So it's to your and my advantage. You get in for a whole year for just $4.97. So instead of the $6.95 I used to charge, you can get in for $4.97 when you order by Tuesday. Okay, and you can use PayPal. There's also a regular Visa MasterCard link, but that's really my insights in terms of breakout mastery. I'm one of the world's foremost authorities on breakout trading. You've seen me in Stocks and Commodities, Active Trader Magazine, Money Show Traders Expos. You've seen my YouTube videos, hopefully. You've seen me work with the world's educators. I work with a lot of the top people in the world, and I'm really pleased to be able to bring you my advanced expertise in breakout mastery. Okay, so read through the and by the way, you can always value testimonials, comments, and video testimonials especially. But you can see, I don't know how many comments here. There's a couple hundred comments from traders in the testimonial page, and you can see what people were saying. I've got more testimonials and comments than anybody I've seen in the whole industry, and I'm really pleased and grateful to all of you who wrote in, right? All this stuff. I answer now and then where it says reply from Ken. But, you know, here's one from Scott saying, I like to better identify real versus false breakouts and whether there's enough momentum behind the breakout to sustain it. That's a brilliant, well said. I haven't read this in the last 2 years, but anyway, this is a comment he wrote in a couple of years back. I like to better identify real versus false breakouts and whether there's enough momentum behind the trade to sustain it. And, you know, that's really the real trick. Getting back to the charts now, it's not just buying a new high. It's buying a new high at a price that's likely to attract new buyers after you, right? It's kind of like buying at retail or buying at wholesale and selling at retail to someone else. I'm happy all day long if I can buy a breakout at $64 a share and sell to someone else at $74 a share, make my 10 points worth of profit on a few hundred shares, up to 1,000 shares. That's what I like to trade. My comfort zone in trading is to start off with a very small capital allocation. You know, so it may just be, you know, 20, 30, 40, 50, 100 shares at the most, and then scale into the ones that work out every 2 or 3 points. You know, or if you're trading options, you know, if you're selling puts, which is a really good way to just collect your premiums and bank it, baby. If you're an options trader, you can use Breakout Mastery to identify great candidates. You know, or if you're new to options, welcome. You could be, you know, buying your calls and looking at your options chain for the strike prices, the strikes that make sense. Look at implied and historical volatility and all the rest of that stuff. I think one of the reasons why Breakout Mastery is popular with options traders too is because I got the strongest charts, right? So it makes it a lot easier to decide whether you're going to sell puts or buy calls or do a strangle or credit or debit spread or iron condor or butterfly or whatever, you know, you're doing. Or if you're just a regular stock trader, which is fine, which is how we all started. These are really good charts to learn from. And every single one of these I covered for everyone back on December 27th. So that was cool. You know, if you've gotten that, and again, look at the members video and for proof, and you can see I went over these in detail. A quick tip that I want you to look at, and I always cover this, is large green candles at the right side of a chart. Kind of like baby bear, mama bear, papa bear. And ka-ching, it's been running up nicely, right? All the way from a base of 22 up to 28. So we got a 6-point run. 6 sticks a run here. Stick is street talk for a point. Sorry if I get into my old Wall Street talk type of mode here. Anyway, so around 6 points. This is a good chart. Not good today because it's red, but if it takes out new highs, maybe worth a shot. This is UCO. All the oil instruments have been up nicely, which is why I'm trading them. You got Voya here too. Look at the directional volatility in this. You know, you look at historical volatility, that gives you kind of a visual reading on implied volatility in the upper right side of the chart. So we got a nice, what I call an acceleration ramp. Well, actually, this is just a simple gap. We got a straight uptrend here. They got a gap up. It pulled back off the gap. It pulled down to support. Previous support held, and then it came back to life. It's alive. Bzzz. And it's off to the races. So consolidating here, but this is a good uptrending chart that I told everyone about back on December 27th. So these are the kind of charts you want to look at. As a breakout trader, you know, I find that it took me years to overcome the fear of being like the bag holder at top. And what I found was that was much more the case with the cheap charts, you know, the $2 or $3 stocks, than it is for these trending charts. But the trade-off is, this would be very upfront and honest and transparent with you guys, is you got to have some capital if you're going to trade $40 stocks. So that's why you might want to sell puts on these kind of stocks or buy your calls or whatnot. And, you know, if you're an options trader, or just trade lighter share size, or better yet, you know, just paper trade and demo trade these so that you can learn the patterns. You know, and I'm very patient and very honest and very ethical about going through the best patterns, the drawbacks, the strength of whether something's actually worth a shot or not, and the differences between patterns that work and the ones that don't. Another quick strategy that I like to cover, and we were covering this in one of the upcoming members-only webinars. You may have seen my articles around the world on ADX breakouts, but often you'll find that if an ADX line comes up over the 40, buying 50 cents above the high whenever that eventually occurs is usually a smart idea, a smart play. So if you use Wilder's average directional index with the 14-step parameter, the standard parameter, you see an ADX break north of the 40 from below. It comes Let's see if I can find one here for you. We want something that comes from under 40 and then breaks over 40. It's a good lead indicator. Okay, well here's one that just occurred. See how this guy was under 40 and now it broke over 40 yesterday? What you do is add 50 cents or so, maybe $1 for a $200 stock, but up at say 208 or so, if it does take out new highs, it'd be worth a shot, right? Because ADX is telling us we've got some volatility. ADX is kind of like a volume knob or volume control on the chart. You're looking for charts that have good directional bias or good directional volatility, and your ADX does a really good job of capturing that when it does start to break. So here, for example, let's use this. UCO broke over the 40, and that's because it started to do a pivot or start to drop, okay, because it's a volatile instrument. The point is, it's starting to get enough volatility to be of interest to me if it breaks out above, say, new highs over, say, 2880 or so. And so anyway, my point is I cover strategies and techniques like how to use the ADX the right way. You may find this an even better technique with the longer term charts too. The shorter term charts weren't blowing my hair back with this. The longer term charts are. And when you start to look for the difference between charts that make sense and those that don't, I think one thing that you'll find is that there's a very narrow path to walk. Kind of like the Indiana Jones movies. I forgot the one where he's with Sean Connery, my favorite one. But he had to kind of leap of faith and walk across a big chasm. Well, you don't want to have a leap of faith as a trader. You just want to trade based on price action. But the point is there are hidden signals out there, and if you're not aware of them for both good entries and what to stay clear of, you can get caught in false breakouts. And it's my goal as part of your breakout mastery training to help you avoid the false breakouts and get in on charts like these that actually run. Again, these are the picks from last month, a few weeks ago on December 27th. So, it works, if I give you the fish, all right, but I'm really keen on teaching you how to fish and then giving you the insights in terms of professional breakout techniques. For example, and I'm well known for publishing this one where you've got a large green candle at the right side of a bullish cup. You add 50 cents to the high of that and you're off to the races, and that's your entry trigger, right? That's what I was telling the traders back on the 27th. And if they listened to me, they'd be up 5 points or 4 points or whatnot. So anyway, these kind of patterns are not evident or they're not obvious. But once you start to learn them and you start to learn the difference between how these work out so well, these kind of like a hidden signal. If you weren't looking for it, kind of like on those Kindle games, I don't know if you've seen those where there's like a hidden object mystery and you got to click around inside like an oil painting type picture and find hidden. Well, you don't want to do that in your trades. You want to just trade directional strength. But the key is identifying hidden patterns or signals that make for good breakouts in the first place. And do it with basically, focusing on price action and volatility. I'm not keen on a lot of oscillation indicators, so you're not going to see me talking about, stochastics and CCI and MACD and Elliott waves and Fibonacci's and all that. I like to talk instead about trade management and volatility management, whether we're looking at accelerated breakout strategies, right, or money and risk management, how to spot the very strongest breakout patterns. And avoiding false breakouts is so important. We make that a two-sequence event or two different parts. We got part one coming up in April, and we have part two later in the year. We also look at things like average true ranges, average directional index, some of the momentum candle patterns, avoiding false breakouts, how to play pullbacks. If something does if it does do, say, an Elliott wave and you're in wave, say, 2, it's moved up, did its first run, it's pulled back, so it makes a wave 2 and it's starting to bounce, or up at, say, wave 3 and doing a wave 4 correction into the final and fifth wave. How do you identify your entry? How do you figure out whether or not it's a dead cat bounce or catch a falling knife to avoid versus a pullback in such a strong dominant uptrend that it's a good value that's likely to continue up? The differences between those kind of charts and those kind of patterns are what we cover in our breakout mastery training. So I hope that gives you a good, honest overview of this. It's kind of like when you're looking for great charts that work out, you want something that's kind of like a high definition TV. I just bought a new one. It just got delivered by, Amazon will be at FedEx this afternoon. And it's remarkable. And a Samsung HD 4K TV. I highly recommend them. Outstanding. And the clarity is so much sharper than my previous high-def TV. The new TVs are great. Well, You want charts that are similar to a nice brand new high def. Go look at the Samsung TVs at Best Buy. Yeah, you'll be blown away. Anyway, you want charts that go a little something like this, like a high definition TV with crystal clear sharp color and a sharp chart that's clean and well defined, that's easy to trade. You could have thrown darts at it and come out a winner. That's the kind of chart you want to be on the right side of. And those are the kind of charts I teach you about once you join me as a Breakout Mastery member. So I do hope that this has been educational to give you an insight in terms of the kind of charts I like to trade, at least professionally, and some of the types of patterns and the thinking process, and get to know me as a person, and just me and all us traders here. Here's a video I recorded a few years back of me telling you a little more in depth about what the course is all about, and much more. So anyway, I hope that it's good. We got 3 fast action bonuses. Like I say, I'll give you both the October, and I need to upload that for my traders. We've got the December and the November. I'll put the October back in here for you guys too. So once you join, you'll get access to the GoToWebinar events on all of these dates for the whole year for only $4.97, which is a total steal. I used to charge $12.95, and then I dropped it once a year to $6.95. Now I'm dropping all the way down to $4.97. So you guys are, I'll make it up on volume though. If I get a couple hundred folks in, it's good for me, good for you. So anyway, the point is, these are the upcoming dates. If you can't make some or all of these, that's great, because I got you covered with high def downloadable WMV high-res videos that you can download in the members area. Those are posted each month for you. You can see lots and lots of testimonials and comments and all the rest of it. Hundreds and hundreds of them. And I answered a lot of them. It took a lot of work for that. So anyway, I hope that this gives you some insight in terms of what Breakout Mastery 2018 is all about. And again, I do urge you to look at the quality and my approach. You've just got a taste of it, but if you want to see a full hour-long video, here is last month's members-only webinar captured on video for you for public display. For all the hundreds of people who want to download it, you guys can download this and take a look and see if it's something you may be interested in. And I think it will be. If you want to trade, and mostly if you want to swing trade stock and ETF breakouts, for longer term swings, you can use what I taught you for shorter term 2 or 3 week swings too, but you may want to use what I teach, because these are such powerful, great charts, for even bigger moves, over say a 4 to 6 week or 8 week time horizon. And use it for directional options trades too. Selling puts is probably the smart way to go, but if you're new to options, you can buy calls as well. And the trick is, when you're looking at your options chain and you're looking at the open interest and looking at what strike makes sense, you want to be able to price project out using time and price value. What strike up here is it likely to be in the money? And so as you're looking to do your options trades, I've worked with the top guys in the industry in that sector. One of the things that you want to do is make sure that you're playing in the right battlefield. You're trading the right charts like these that actually have the best strong directional bias. That makes sense, right? Like I say, like my new high-def Samsung TV that I'm going to go downstairs and watch in just a minute. It's always cool to see nice clean charts that also sharp, high resolution that you can kind of throw darts at and come out ahead. Because just like people, previous behavior is the best predictor of future behavior. If you're trading haphazard charts and you're getting stopped out because of it, or you're throwing Hail Mary passes and not sure what the heck you're doing, and you're just trying to guess and gamble and 500 or 1,000 shares for a couple of stocks here and there, you get rewarded with $500 stop losses for your trouble. Stop the madness. You got to get a little more, professional and focused, right? You have to, the best traders in the world are those that can adjust and adapt to not only changing market conditions, but adapt their own personal trading style that makes sense, right? Bad news, folks. I looked up professional trader in the dictionary, and it ain't you. But the good news is a little humor there. People like my humor. It's kind of funny. Booyah. But the truth of the matter is, and you and I both know, trading is tough as heck, and it's a lot harder than it looks. You want to put the odds in your favor by trading more instruments on smaller size with tighter stops with the strongest charts. That all makes sense, right? I mean, that's common sense. If you run that past your spouse or your significant other or whatever, they'll probably say, yeah, trade small, trade tight, trade cautiously, don't risk a lot. If you're still at a place as a trader, and I know a lot of you may be, and no shame in it, but if you're still in a place as a trader where you conceal your trading losses from your spouse, You don't tell them how much freaking thousands of dollars you lost trading, because you know they'd hit you up the side of the head and say, you lost how much money? What is your major malfunction, numbnuts? We could have gone on a vacation somewhere with that much money. If that sounds familiar, make 2018 the year in which you change it and turn it around, okay? Go back to paper trading or real small size trading. Do what makes sense. Trade carefully. Trade the best charts out there. Trade charts that actually have some good directional volatility. I'm long the oil ETNs like UCO. I also trade oil, OIL. Same chart, but a fraction of the price, right? $7 stock. And again, if you guys trade cheap stocks, make sure they go a little something like this. Don't trade those low float crappy stocks that these pump and dump kids are out there trying to blow smoke up your rear telling you to trade. Anything you swing trade should have at least 1 million shares a day volume. It should have at least a few points of trading range. And if you're trading a cheap stock like this, it should have this pattern, which I've taught for years, called an acceleration ramp. You got kind of a steady uptrend that then does a sharp, kind of close to 45-degree angle breakout. Goes a little something like this, right? That tells you got increased institutional buying volume and momentum. Anyway, our time is up, so I'm out of here. Let me know if any questions, but I do encourage you to try out Breakout Mastery. Try it out first for free by just downloading last month's video and see what you think, right? You have my word. I'm very honest. I'm very authentic. I'm a real money trader with lots of proof that I've really traded, unlike most people. And I'm very much here to make this a premium coaching event. Instead of charging $3,000 or $4,000 like I, a money show speaker and stocks and commodities columnist, could and should be, much to my marketing consultants' consternation. They're saying, if you don't charge a lot, they won't think it's worth a lot. So you should charge a lot. Go ahead and charge $3,000 or $4,000 for these things. But I remember what it's like back in my struggling days as a trader back in the late 90s, and I know that that's not good. And so you want to try and make it affordable for everybody and give outstanding content value. And I got so many of my members who stay with me year after year. And so if you're one of them, welcome back for 2018. We've got new strategies and updated charts for you all year long as well. And as you guys know, I'm very generous with my time to answer questions. Not like a wham bam, thank you, man, we're out of here. I like to give you good, honest, step-by-step training that makes sense. What else do we got here? Like that's a real money trade. That's what you're seeing is trade confirmations from a couple thousand shares of MGM stock. That was my biggest real money trade in recent years. Now MGM's up at like 37 a share, right? But anyway, I made 3,700 in real money trades. In those overnight holds and a couple thousand MGMs. You get answers about how to trade breakouts with better entries, timing, and strong breakout trades. And the goal is really for you to learn a more professional price action breakout trading approach. And I want you to start taking charge of it. It's like they say you may have heard that saying that repetition leads to mastery. And what you have to look at is what's your exit strategy for each trade. Every good trader was once a struggling trader. And so the good news is that it can be taught. But you have to learn from a real person that actually does this and knows what he's talking about, and you want to be able to instantly take action and start getting some personal changes or improvements in your approach. There's an old saying, no pressure, no diamonds, right? It's like a lump of coal only becomes a nice looking diamond with a lot of pressure. Well, do not pressure yourself too much, but do get out of your comfort zone and start focusing on a more professional way to trade. These are some of the topics that we cover. I'm not going to read all this stuff, but these are some of the types of things that I cover in Breakout Mastery and have for many years, every single month. How to avoid false breakouts, how to look at volatility filters, these types of thinking process. It's a master class in a masterminded group. I'm an advanced professional, one of the world's top experts in breakout trades for both intraday and swing trades, as you may have seen me all over the world. I'm the guy to go to for one of the top guys to go to for breakout trades. Anyway, you want to be able to look at things like, a sensible approach. What's the depth of a recent cut pattern, and use that as a price projected exit target for an entry, or at least don't go in right above the high because that leads to a false breakout. To maximize your profit potentially in a trade, what's the best length of, say, a single major run, and how do you set up a trading plan? That's the question you have to ask yourself. What are the countermeasures you use to avoid problems? So anyway, these are the types of things that I cover for all of my Breakout Mastery members, and I certainly hope that you'll become one of them. You have my word, this is really good top-level training. It's not surface-level, fluffy BS. I'm a roll up my sleeve, and I'm a practitioner. I like to keep it real. And I'm very binary about this kind of stuff. Either you're going to make it or you're going to blow up your account. So if you're going to make it, you got to learn professional strategies. And on the punchline is, learning a series of training things and really start building your skills month by month. And it's not too much, I know some coaching programs only like 6 or 8 weeks long, and that's kind of too much of a rush because we all got a life and we're busy. So instead we meet the last Wednesday of each month for an entire year together. And we cover brand new strategies in each event with current charts, right? Virtually no PowerPoints. It's all like all my training is like 90% charts. So do register your spot now. You can go to breakoutmastery.com. I used to run all these different websites, but I simplified on the advice of my design consultants. So if you go to breakoutmastery.com, that'll forward you to trademastery.com/breakoutmastery. So keeps it all in one place. All one happy family. Thank you for your attention and your consideration. I do appreciate it.